So if you want to know how much you could lose in terms of property, take a look at this video. So can you lose in property? Or if you think you can or you think you can't, whatever your answer is, this video is for you. So the thing we get asked more than anything when clients come to invest is, what is my downside? What is my risk? Can I lose money? So let's take that question on its own. Can you lose money? Well, of course, yes you can, but there's a big pinch of no you can't as well. So as we've said before, you can lose your money on anything. However, if you've done things in the right manner and you've not rushed into anything and you're not rushing to sell, the reality is real estate over the medium term to long term is always on an upward trend. My advice to anyone investing, regardless of what they're going to invest in, is look at the ways you can lose money. If you're comfortable with those ways and you've mitigated them as best as you can, then the reality is you can move forward. For example, if you keep your money in savings rates at 2%, when inflation's at 6%, you're effectively losing money. You're losing 4% in real money per year. If you're happy with that and content, leave it where it is, no problem at all. If you're not happy, then do something about it. If you understand that you can buy a stock on the stock market and that stock could dip, it could go to zero, or it could even dip in the market trend, even if that company is performing extremely well, then again, go for it. If you're happy with that and you're happy to wait out the trends, no problem at all. Then that's the way you've got to go. Now with property, there are really only two ways you can lose. The first is that you can't afford the mortgage, and if you don't keep up with the repayments, the bank will take the property off you. The second is you need to sell the property as quick as you can and the market isn't as strong as when you purchased it. So you either have to wait or you have to take a hit on the property price. The reality is you should be able to answer those two questions before you even invest. Think long term, 5-10 years. You shouldn't be thinking about anything shorter than 5 years. If you are, go and invest in something else. But the reality is property is a medium to long term investment. The second thing you have to make sure is that your affordability is there. Don't scrimp and scrape every month from your rent to cover the mortgage. That's a surefire way to make errors. What you need to do is think, my mortgage is covered by my rent, but also I've got a personal income that can cover it if need be. So all intelligent investors will ask is, how long can they hold the property for? As long as it's 5 years plus, the chances are that the market will increase during that time. And the other question is, does your personal income cover the mortgage? If it does, then seriously, you've got very limited downside. So let's take two types of buyers, one cash and one mortgage. If you're a cash buyer and you've purchased your property at a market rate and you know you can keep the property for at least the medium term, 5 years plus, the reality is you've got a very slim chance of losing money unless something absolutely catastrophic happens. But the chances of losing money are extremely slim. Historically, the property market over the medium term has always increased. Take your own house, for example. The chances are it's worth more now than what you originally paid for it. Now let's look at the flip side. You're a mortgage buyer. You've maxed out your loan, your income only just covers your mortgage and your personal income is low. Then you really need to consider, is the property right for you? Because it only takes 1, 2, 3 months of an empty property, and if your income is not covering the mortgage, the bank could take it off you. But for the most part, we would be doing that due diligence for you, and we will only recommend if we feel that you have the affordability, along with your mortgage broker feels you've got the affordability to take things forward. The reality is the property market is one of the safest asset classes out there with very limited downsides, but major upsides. Safe investing.